Hello, and welcome. Welcome once again to the Secrets of the High Demand Coach podcast. And here with us today is the one and only Ashley Tison, who is an attorney, a professional speaker, and the founder of OZPros, a full-service opportunity zone advisory firm. Ashley has worked in real estate mergers, acquisitions, and business growth and management. He brings his breadth of experience in these areas to educate and guide investors to navigate opportunity zones. He has built a team uniquely positioned to handle the acquisition and securities, real estate, and tax nuances inherent in opportunity zone deals. And he's here with us today. Ashley, I have bumped into opportunity zones a couple of times. There's actually one near us, so we might talk about here in a little bit. But I'm wondering, just out of the gate, first off, welcome to the show, but out of the gate here, what are opportunity zones? Because that means something very specific, and why do they matter for the folks listening here today?
Yeah, and it's interesting because, I've been having a lot of conversations about them recently, kind of as we're coming into the election, and there's this misconception out there that they're expired, that they're dead, that they're no longer in effect, and that is absolutely not the case. Opportunity zones were created by the Tax Cut and Jobs Act of 2017, and by very definition, that legislation expires in 2025, at the end of 2025, and the Opportunity Zone program itself sunsets in December of 2026, which is all the more reason why people need to get on the stick right now. They need to know about this, they need to get a fund set up, and they need to do at least one project so that way they have this Opportunity Zone fund, which an Opportunity Zone fund is literally just an LLC that's taxed as a partnership that was specifically set up for investing in opportunity zones. And what an opportunity zone is it's a specially designated census tract. So any of the low-income census tracts that are out there, Congress allowed each governor to designate up to 25% of their low-income census tracts. Puerto Rico got special dispensation because of the hurricane, and so literally almost the whole island of Puerto Rico is an opportunity zone. And it was based off of the 2010 census, and so a lot of these tracts are not low income anymore, but they're areas in which the governors wanted to see development, they wanted to see investment, they wanted to see things happening. And so if you set up an opportunity zone fund, and with the goal of investing either in real estate or in operating businesses in these zones, then you get to defer capital gains tax. So that's one of the kind of the caveats and kind of the unfortunate pieces is that you do have capital gains. You need capital gains in order to start your fund. And if you take that capital gain, you put it into a fund, you get to defer those taxes till December 31st, 2026. But then whatever you invest in, after your fund investment turns 10 years old, that investment gets a step up in basis to fair market value when you go to sell it. And that's really significant because it not only eliminates capital gains tax, but it also eliminates depreciation recapture. So we're pretty sure that capital gains are going to go up sometime in the future, or they're going to do something with it. Opportunity zones are the quintessential hedge to mitigating that, your growth on an asset. And it's real easy to locate a business in an opportunity zone. You could have a coaching business, you could have a software development business, you could have a staffing business. You just have to have your headquarters in the zone. Your people and your products can go outside of the zone, but you need to, whoever's managing those people need to be located in the zone. And bam, now all of a sudden you've got effectively a super Roth IRA that your business is owned in without all of the crazy, requirements of a Roth IRA. So I think it's the greatest tax incentive that Congress ever created. And that's our mission, is to let people know about it and to put it in the hands of Main Street America.
Wow. So who then can take advantage of this? So for, I think some of the easy ones are folks who are starting new businesses. It's something to think about. Folks that have capital gains and are looking to invest in other businesses, there's plenty for them to think about. What about that space between? What about the entrepreneur who's been working for 10 years, they have an office somewhere? Is there anything that they can do to qualify for these benefits?
Absolutely. Most entrepreneurs that are churning in a business, myself included, we want, instead of having to trade time for dollars, we want to have some kind of residual revenue. And one of the best ways to do that is cash flowing real estate. And if you're going to be buying cash flowing real estate, why would you not buy it in an area where you're going to automatically make at least 25% more by mitigating the taxes that you have to pay to Uncle Sam? And so we help people all the time set up funds in order to do just that. Now, for some people, we actually have to get creative about how we engineer a capital gain, right? Because if they're working every day and that kind of thing, we sometimes have to go to their stock portfolio, sell their stock portfolio at 9, buy it back at 901. Now they've got a paper gain, and then they can take cash and use that cash to line up with that paper gain. We've got other creative things that we've done for people. And then the real folks that, where this is really powerful for are the people that are anticipating an exit. So they've built that business and they're looking at potentially selling it down the road. We've got a big wave of businesses being handed over right now, through the baby boomer generation. And so whether you're one of those that's selling or whether you're one of those that's buying, we can use opportunity zones to help both of those folks. And we've done that on a regular basis. And so it's not just for somebody that has exited a multi-million-dollar hotel and wants to go into another one. It is for Main Street America. Now, not everything's going to be able to be done in an opportunity zone. So if you've got, a swanky retail center where you need to be like in, a really nice neighborhood at the premier retail spot, that might not be the best, utilization. But we've been able to make almost every business that we've encountered work.
Wow. So just help us out with what's the difference between an operating opportunity zone fund and opportunity zone business? How do they?
Yeah, it's kind of a weird distinction, and it was so because Congress wanted to be able to allow people to not just do real estate; they wanted to allow people to do businesses as well. When Treasury gave us the regs, they created this kind of fiction called a qualified opportunity zone business. And it was kind of in the context of Congress as well, but it wasn't really fleshed out. Treasury really fleshed it out. So think about a qualified opportunity fund is literally just like a holding company. And then you set up a qualified opportunity zone business underneath it. You flow your money into the fund, and then it drops down to the business. And usually we use that double stack structure on almost every transaction. Unless you're buying something that's newly constructed, that's right before its certificate of occupancy, we will do, in that case, we just have you buy it in your fund because you don't need the benefits of having an opportunity zone business. But that's quintessentially the difference, is that you've got a fund, and literally, once again, it's just an LLC tax as a partnership that you call a qualified opportunity fund. And then you got a qualified opportunity zone business that, once again, can be a LLC tax as a partnership or a C Corp or an S Corp or whatever you want. We typically don't do S Corps there because of some complexity, but we come up with the most tax efficient way for you to be able to deal with the income, because opportunity zones don't help you with income along the way. They help you with exit on the backside as your enterprise value grows. And so we've got some tricks that we use in order to most effectively deal with that income. And it's been fascinating. I dabbled in tax, right? Like everything's got a tax component to it, but I wouldn't have called myself a tax attorney until I started doing opportunity zones. And I've quickly had to become a tax attorney because there's so much tax code tied up inside of it. And through that, I've really gotten into some kind of creative ways to mitigate taxes on the income side. And then ultimately, everybody who does a fund is going to defer those taxes until 2026. And then you're going to have to pay them then. We have come up with some really great solutions to minimize those taxes on December 31st, 2026. And so what OZs present is the ability for us to be able to get a deferral till then. We can then implement some of our reduction strategies, and then we position you to be eliminated, tax-free on whatever your new investment is. So that's a really powerful trifecta that opportunity zones have uniquely presented themselves as an answer for.
That's fascinating. That's very, very cool. Now, I know with a lot of instruments like this, there is accreditation requirements for investors. Do you have to be an accredited investor to take part in an opportunity fund or to create one yourself?
So not to create one yourself. Now, if you're investing into a professionally managed fund, and we've got a bunch of those, and we got some great ones, We're helping Jonathan Tower at Arcturus with some stuff that he's working on that's in operating businesses. We help the guys at Caliber. And we've helped a bunch of different kind of professionally managed funds. And if somebody wants to go into that where they want to be hands off, then they're probably going to need to be an accredited investor. I don't know of any. Well, there's one that's traded on the New York Stock Exchange that you could buy called Bellpoint. That you don't have to be an accredited investor for that. But all the other ones you do. In order to set up your own, you absolutely do not, because it's literally just a business. And all you got to do is just call us. We talk about your strategy. We talk about the best way to do that. And then we can literally have it set up in 2 weeks.
Fantastic. So I want to shift gears a little bit, because we've talked a lot of kind of tactics around this, but I'm wondering if we can kind of pull it all together. There's a question that I ask all my guests. I'm going to ask it of you as well. And that is, what would you say is the biggest secret that you wish wasn't a secret at all? What's that one thing you wish everybody watching or listening today knew?
It's interesting because I was thinking about this, and my first answer was that opportunity zones aren't dead, right? But we just kind of blew that one out of the water. And so hopefully that's not a secret anymore. I think that the one that really resonates with me, and it literally took me, I guess I kind of knew it, but I didn't really apply it until recently, is that it's all about posterity. And when I say posterity, I'm talking about your kids. I'm talking about your kids' kids. I'm talking about your family legacy. And I'm talking about your impact on the community. And that those are the most important things in life. And that we get so busy and we get so focused on, and we're so intentional about how we run our businesses. But a lot of times we neglect our posterity. And I think that that's the biggest secret that I wish that people knew, is that, man, it's all about posterity. And there are some great vehicles to allow you to save money in taxes and be able to have a massive impact upon your posterity. Yeah. Opportunity zones are just one of those tools. We have a whole arsenal of those. And that's kind of, as we transition through, right, as we've kind of gone through this opportunity zone life cycle, and we still help people with them, and we're still excited about them. We think the program's going to get extended, but there's so much more, and there's so many more tools out there. And as we've investigated those, we've really come across ones that help people to focus and to execute on doing that, on really being intentional about how they are dealing with their estate plan, how they're dealing with their kids right now, talking about money, how they're inculcating values and important things into subsequent generations and into their community with their treasure right now, with their money, but more importantly, with their time and their energy as they go about just doing life. And so I think that that's the biggest one that I would love for people to just embrace.
I love that. There's a shift I think you're speaking to that every successful founder makes, where it's not about what you make anymore, it's about what you keep, right?
That's right.
And that's what sets you up for what you leave behind. And so I love that. It's such a powerful way to think about strategy and business. And
I might have to steal that one. That was a great line.
Yeah, I can't claim it. It's from a friend of mine, Kyle Boucher here in Atlanta. But yeah, it's great. So there's a couple things here. One is a really, really compelling reason to jump in on these opportunity zones. Maybe they'll be extended, but maybe they won't. So this is the time to start. Where can they find out more about how to get started and whether or not an opportunity zone strategy would be a good fit for them?
So if they go to OZPros.com/podcast, we've got some specials for your listeners. Once again, that's OZPros.com/podcast. If they want to find out where the opportunity zones are, they can go to OZPros.com/map. Basically, you can find everything you need on our website. We've got a masterclass that is there and is free. And you can run through kind of that masterclass as well to see if it makes sense for you. And then, the easiest way is to jump on a strategy call. We've also got a mastermind that we call Ascent. And if you kind of go through that first mastermind process and you're like, hey, wow, I'd really like to learn more, we've got a free 30-day offer for folks where they can jump into that Ascent. And I think that Ascent is the quickest way to at least a master's level. Some of the folks in there have a PhD at this point, education in opportunity zones. Wow. We want to equip people with the knowledge that they could get comfortable in doing these things. And because once again, to your point, it's not about what you make, it's about what you keep. And the great thing about opportunity zones is that you don't have to ask for permission. You don't have to get, you don't have to go to the IRS and get them to check off on it. But you do have to have a really good audit trail because you have to prove the position that you've taken. That's what we help people do.
Got it. Ashley, thank you so much for being on the show. Just a privilege having you on today. Fascinating topic and conversation. For those of you watching and listening today, your time and attention mean the world to us. I hope you get as much out of this conversation as I know I did, and I cannot wait to see you next time. Take care.